Good morning, everybody. It is Saturday, May 18th, and we're going to start our commitment of traders review for the data that came out yesterday on the 17th. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. We'll start with the SPX, and here we see that commercials are still holding on to their short position as we head into NVIDIA earnings and FOMC minutes next week. But it has been drastically reduced from April 9th into the end of April consolidation. We can review our levels and plan here from last week, where we had our rotational zone, and above that, our upper target at 53.23. And I hope all of you guys capitalized on this with the daily plans as well. We got over our rotational zone and right up to our upper pivot. And now for the week ahead, we're going to be looking at 53.01 for our lower end of our range and 53.40 as our upper range area, with the target over that at 53.70 and our pivot at 53.23. If we break down, 52.70 is our first downside target. For Monday and Tuesday, we will watch 53.44 very closely, as we do expect hedging to be coming into the market. So any up move, that will be where I'm watching very closely for those portfolio managers and funds to begin their hedging. If we turn our eyes to Bitcoin, there's still not much changing here for us to act on. We saw that commercials added into a net long position on a 10% move up in Bitcoin, and now they went net short. But we aren't at any kind of extremes for us to capitalize or see any directional move we can piggyback on. And so we'll go to commodities. We're still waiting on signs for CL or a new signal on natural gas. And so we'll go to our golden well. Gold played out very well for another week. And we see here that commercials are at a max short position on 1 year. There's still room to go on 3-year and longer durations. But we'll review our plan really quickly from last week. We had our rotational zone, and congratulations to several of you that caught the breakout to the high end at 24.28 we were looking for. We had that on Friday. So this was that breakout here. And now for the week ahead, 23.75 is the middle of our rotational range. That rotational is 23.38 at the bottom and 24.17 at the top. If we get outside of that range, then 24.84 is going to be our target. And if we break out to the downside, 22.85 would be the target. Now to the currency markets, we're still waiting on some signals to set up. So we're going to do a high-level review of the dollar. As pairs are against the dollar, we'll go over the range and levels to watch for this week. For our students, we review the dollar daily with ranges to use in day trading for our time frame. On our CoT report here, we can see there's no edge. There's no sizable positions in the dollar, as we're waiting for people and the traders to begin making their decisions for where they're going to take it next. In the meantime, we can use the dollar and our correlation matrix in our trading. And for the week ahead here, we'll be looking at the dollar to be range bound if it holds 104.40 and rotate back up to 105.60. If it breaks 104.40, then we'll be looking for 103.38. Our pivot is at 105.14. And if we break out on the upside over 105.60, then 106.68 is the target. If you want to check out any of our offerings, you can find us at Sticks Trading Academy, or you can check out our Discord, or our courses. Have a safe week trading, guys, and hope to hear some more success stories.